Good afternoon, traders. I am Nalnakshi Swami, welcoming to my channel Smart Index Edge. Everybody was asking me why you are using circles, why you are using Fibonacci, why you are using pi. And so I wanted to explain the cycles. Why did I use the circles, triangles, rectangles, and all those things? So for that, let us understand the market cycles. You should understand the market cycle. Unless you understand the market cycle, whatever I tell you, you cannot capture it into your trade. Market moves in cycles. You can see when a market moves, it is a green color. We call it as a bull move, bullish. And if the market starts moving, it is bearish. You can see the graphic image here, over here. This bull is standing up and the bear is down. It is sitting down. So, market moves up and down, down and up and down. This is the market moves in cycles. Moves in patterns in upcycle. That is, it makes a structure for that. For that structure, it makes an higher high, higher low, higher high, higher low, higher low. So this is the, see, when you are climbing a mountain, you can see the troughs and peaks. Peaks. So the person is climbing over here. See, he is putting the step, putting down the step here and climbing up. So like that, market price puts a step down and step up, step down and step up. So the steps will increase. The steps are increasing over here. In a down cycle, it starts moving higher. So peaks are lower peaks, lower lows. Markets moves in lower high, higher, lower low, lower low. So the market is climbing down. And how does it move? It moves in a measured move. You can see the alignment of the stairs in a measured way so that you can step up properly without any strain. Higher high, higher low. This is the graphic representation. It is in a measured move. Measured way, it is climbing up. So you can see the price forms the ranges and it moves in time, moves with the time. Price, here the price moving in a range, stepping up in 3 cycles. That is measured move, like a measured staircases. Everything is measured. Here in this graphic image, price moved through space fast. See, even though price moved in 3 cycles, that is measured move, it did not match with the time. It is too fast. That is imbalance. When there is an imbalance, the price has to balance with the time. Okay. Both moves in 3 cycles. This fast move is also in 3 cycles, that is measured move. Even this move along with the time. This has moved fast with the time. This has moved along with the time in a proper way, both are measured move in 3 cycles. Squaring the range. I'm coming to the squaring the range. Here, the price moved only in 2 cycles, 2 time cycles, 1 and 2. And these 3 cycles of price movement fitted within the 2 time cycles. That means it is fast. So, this move we can anticipate. This type of move is possible. That is 90-degree move. Not literally 90-degree. It moves in 85, 75-degree move. You can see in the market when it moves like that. That is momentum. Their price and time are very fast. Here, I've put a circle balance over here. When the price starts moving like this, above this level, horizontal line, it is moving bullish move. It is stepping up. And if it starts moving below this, it is stepping down. Even stepping up is also 3 cycles. Even stepping down is also 3 cycles. Measured move, ranges, cycles, circles, rectangles. Why I'm using this? Because sometimes this measured move, it takes lot of time. Then, if it may start with a triangle and it may become a rectangle and final move may be triangle. That means price moves fast, halts. Rectangle means it moves horizontal with the time, it spends time, and again it spikes up. That means it is taking time to move. That cycle is whether it is a three cycle of up move or 3 cycle of down move can present this type of movement. Like a triangle up move and a rectangle means going along with the time, spending the time, and again a spike can come in the market, but it will be within the measured move. 3 cycles that you remember. That's why I'm putting the 3 cycles. And the beauty of the circle is whatever you increase by the cycle, time cycle or anything, the the circumference of the circle, pi calculation, it remains the same. It remains the constant. That's why I've used pi in my calculation for the levels. That means they go horizontally. I can know the levels horizontally, pi levels. That is the calculated move. Okay, so in this diagram, you are seeing this price moving with the time fast and price taking a little bit time more. And this is a bullish move. This is a 90-degree move. And this is an angular bullish move and it is angular down move. In my next slide, I have used triangles, rectangles, and squares. See, these are the triangular move. It starts move. There will not be, it will no retracement at all. Market will not, you might have seen a single day presentation, 3 cycle measured move will be seen within a single day. You might have seen 200 to 300 points or 400 points, but it will be a measured move. Measured 3 cycles. And you might have seen price taking time. Even though it is a bullish, it moves, spikes up and goes sideways. It spends time and it moves, spikes up. That's why I've made weekly templates. And again, same thing. So this is the graphical, I hope you are understanding. why I'm representing all these things. And final thing is squaring the range. Whatever the move, whether it is a spike up or a slow move, range has to be squared in time. That has to be squared in time. When that happens, when the range, measured range happens with the time, then turning point, new cycle, new move, reversal will come in the market. I hope you are understanding the market cycle. So in a very simple way, I have explained the accumulation, markup, and distribution phases. These three phases moves in three cycles, three measured moves, three circles. Okay, let me take it to you the chart and show you what has happened over here is the market here. It showed from the range, it has formed the range, and this is one range, one circle. Let me put one circle over here and clone it. To measured move, and again I'm cloning this. Three measured move, and pi calculation is 3.14. That is, so in FIP tool, I have tweaked for this. You can also do this 0, 0.5, 1, 2, and 3, and next level 3.14. Let me take it to the settings and I'll show it to you so that you will understand. No, it is showing the circle. 1 minute. Here, see, I've checked 0, 1, 0.5, 0.236 just to know in between ranges, 2 and 3.14. It is actually 3, it is not designed for default setting, will be some other value. I've set for 3.14, that is the pi value. So why I'm taking this? Ranges 0 to 1, 1 to 2, 2 to 3, and 3.14. Okay, so for making easy for this, instead of drawing circles, you can do like this. Actually, I must thank one of the person while after seeing my video, he suggested me, Madam, why you are taking the tool and cloning the circles, which is time consuming. You can use this hack to hack in a Fibonacci tool and you can make 3.14 like this, 3 measured move like this. So if you see here, this is the measured move. Measured move, it's squared with the time. 3.14, this price is squaring with the time, that is 22,669, you can see there, and 22,654 or something. Yeah, it is almost the same. Then you can, time has come to the price, it range, squared the range. The range has been squared with the time. That's why a new beginning, reversal started in the market. You have seen experiencing reversal over here. And I talked about the ranges, squares, and rectangles and triangles. So here market exhibited a markdown. Markdown, how did it go? It is like a big fall. It has fallen So quickly, price has fallen, moved so swift, but the time has not taken place. It has not matched. That's why you are seeing the horizontal move. The market is experiencing a cycle that is consolidating ranges. Okay, where is this time? I mean, this three cycles will end. If I measure this range, if I measure this range from that range, and my squaring of the three cycle comes at 22,147 to 22,172. So I don't know when it is going to square. This price will come. When it squares with this time, whether it may be on Monday or Tuesday or Wednesday, when it squares with the time, immediate. Suppose if it squares with the time in the morning itself, you can see a 5-minute candle becoming the low of the day. And you can see price moving like this. Price parabolic move you will get like this. It has fallen down like this. The price, see, you can see it has moved in the two cycles of range with very short time. Time is very, sorry, time is very short. Two ranges it has moved. That's why, since it has moved very fast, it is balancing. So rectangles are formed, ranges are formed, and this range is wide. As an intraday trader, you will get an opportunity to trade in these ranges, but you need to find the direction very instantly to catch the momentum, because even the three cycles are played within a single day, within hours. 6 hours, a ranges will be played. That means markup, markdown, and accumulation, distribution, name it. They will be played within a single day. For that, you need to catch very early. That's why I designed the 5-minute strategy, keeping in mind of this accumulation, distribution, consolidation, and markup. Everything in my mind, I designed the strategy and the setup for the intraday, for especially for option buying, because this market is structured for option sellers, writers, not for option buyers. Only option buyers will get the opportunity if they find the direction instantly. Instant direction. That's why I designed for the 5-minute strategy, and the play will be within 1 hour. And don't forget, you need to get a structure. You need to get step up. Let me take this tool. It has to step up like this. If you don't get the step up, you are going to lose money. But even though yesterday it showed as if it is going to fall, there was a step up. So initial 5 minutes, first 5 minutes, after the 5 minutes, for till 1 hour, you got a parabolic move, momentous move, and the 22,400 call option from 72 rallied up to 170. What more you want? I hope you understood why I am drawing this. So whether it moves in rectangles or whether it moves in triangles, it has to square. This the range has to square with the time. So that's why, since it has moved very fast, the movement here is very fast. You can see over here. It has not moved with the time. It has finished its move. So it is taking time. This range, this price has to square with this measured move has to square with this 22,172 and 149 because I have measured the range. Okay, it's not exactly. You can see for 22,218 to 22,190, it is going sideways. So what happens when the people see the ranges, they start call writers and put writers, they start betting over here. And the dealer is somewhere here. What he will do, it is like an Andar Bahar game. He will spike up and spike down. He will put a card to that side and show, and he will grab this liquidity and he will come up. But until and whatever may be, he may spike up tomorrow. There is liquidity, but and the price is not squaring with the time. It has to square. Price has to come back to this level. At that time only, it starts moving higher. That's why you should understand the market cycle, measured move, imbalances, and liquidity, dynamic liquidity, and static liquidity. Dynamic liquidity means when the price moves so swiftly within this cycle. It has moved so swiftly within this cycle, there was dynamic liquidity available in the market. Market moved higher. And there is static liquidity available for the market. It is going sideways. It can do like this. It can spike up and take the call writer's money, and it can move down until unless it squares with this price measured move. There will not be any reversal, new cycle, new beginning. Or it can, after hitting this measured cycle, a new cycle down move can begin, or new cycle up move reversal can begin, or this reversal can, this down move can continue, or up move can continue. Either it can happen. So then this is the level which is make or break level for this cycle. For this, so it is continuing to the weekly template. Monday for this week, this is the deciding factor. 22,193 is the deciding factor. Okay, suppose if it fails to, after squaring with time, it may make a rectangle. It may not immediately reverse, and a rectangle will be formed, box, and that box, whether it is moving, that cycle is moving towards the upside, or this cycle is moving downside, it will decide. The range will decide. So I hope this will clarify all your doubts, why I'm using these circles, measured moves, and all those things. And how in my next video, I'm going to explain how I've designed again 5-minute strategy for the momentum option buying strategy, fitting into option buying, whether it is a put option buying or the call option buying. Thank you very much, friends. Nalnakshi Swami signing off.